Life insurance. It's a topic that most people don't want to talk about. It's a topic that's most important in your life. We're here to break it down for you and help you out with it. Welcome to Canada Now. My name is Naresh. This is my buddy Paul, and we're going to cover different types of life insurance today.
Yeah, so we'll talk about some of the most common ones: term life insurance,
So the first
whole
one,
life insurance.
so there's 3 or 4 different kinds of policies that one can get in, Paul.
Yeah.
Yeah.
So like the term, whole life, universal, and we'll talk about maybe a little bit of mortgage insurance.
Mortgage insurance. Okay. All right. So let's start with term life insurance. What's this all about?
Well, basically, the term life insurance covers for a specific period of time. So if 10, 20, 30, 35 years, whatever, and the benefits are normally more affordable than the whole life or permanent insurances. So term, like it says, it just covers a basic term length.
Okay. So what term, Paul? Is it, let's say I call an insurance company tomorrow and say, or today or tomorrow, and say, listen, I'm looking for life insurance. Let's say I'm 25 years old. I've just started my family, just got married. I say to the insurance company, I'm looking for some insurance, for my family. So they'll come in and they'll probably do a medical test.
Yeah, so there's different kinds. So first of all, if you're going through insurance, they'll figure out what's the best for you.
Right. So the insurance person will talk to you.
Yeah. They'll break down what's the best. And if you're 25, do you want a longer term? You might not have a family yet, but it's easier to get life insurance when you're younger because it's cheaper, right?
Right.
The longer you wait,
You're in better
bit,
shape.
it's a bit better. So say at 25, you want a $500,000 policy or whatever, $300,000 policy. It's going to be quite low at that time, but they'll figure out what's your length you want this for. And normally you want to build it so you're going to have a family.
Right.
So you want to make sure that, you have, at 25, you're just not going to get a 5-year policy.
So the basic gist of this term life insurance is, let's say I pay, $30 a month and I get $100,000 coverage, and that just keeps going
to the whole term.
To the whole term. That's
Yeah.
what your payments remain the same, and your amount you get remains
So
the
it's a
same.
level term. So it's you're going to pay the same amount, and that's the most simplistic, easy. It's flexible. It's just easier to understand. It's probably the most common insurance that I would recommend for most people. Term is probably the way to go.
Right.
If you're 35 and you want a 30-year policy, it's going to take you to 65. Hopefully within that term, it's going to be fairly affordable.
Right.
And you have the coverage that whole time. So, so term is kind of the best.
The money doesn't add up. Like the money that I'm paying $30 a month, that doesn't add up anywhere. That's just the cost of it.
Right.
Right. So if something happens to me, my family gets paid out, spouse or kids or whatever, they get paid out, and that's where it's at.
Whoever the beneficiaries get the money. So, and you normally want to go for term insurance to cover those expenses that. So all of a sudden, say you accidentally pass away at 45, you want to make sure that you have enough there that covers whatever's left on your mortgage, whatever debts you have, maybe a little bit of income for your spouse and kids or education. So you really want to sit down and analyze what your needs are for term insurance to cover. So if you want to cover 10 times your salary, you want to make sure that that's covered. So
the amount of coverage will depend. What you pay per month cost will depend on the amount of coverage you want. The more higher coverage you want, the more you'll pay.
The more you'll pay, and the younger the better, because you can get a $500,000 policy at 25. Say it's going to be cheaper than 35 or 40-year-old wanting the same $500,000 cover. So it goes off, based off your age and stuff. So, but the key is make sure you have enough. Really go through, what do I want covered?
So again, this is, as we always say in our podcasts, sit down with the experts, whether it's a financial planner for your financial needs, and in case of insurance, it would be an insurance planner.
A financial planner could assist with that.
A financial planner, if they would have to have an insurance
license
to discuss this, right?
Yeah.
Okay.
So Yeah, so I mean, term is just it's flexible. You can get large coverage amounts for smaller amounts that
Yeah.
are it fits in your budget.
Again, because if you're just starting out in life with family and that would make sense because your payment is only $29 or $19 or whatever it may
Yeah.
be per month, and it gives you some security, and that's fantastic.
Yeah, and that's what you're looking for. And simplicity. There is some cons, like it doesn't build up any cash value if you're into that.
Yeah.
It's limited, so you really want to pick your time frame. You know, if you want a 10-year policy and you need it for 30, well, you really got to pick your time frame. So, and there's no lifetime coverage. But again, term is meant for just because in that 30 years that you have the coverage for, or 35, hopefully you're doing what we talked about earlier, budgeting and doing all that stuff.
And
So
making your own
by
savings.
the time that
Yeah.
cancels, you are set and you don't need that insurance.
And you've made your
anymore.
own savings.
Yes,
etc.
you've invested.
Yeah. Your mortgage is paid off.
Right.
Yeah.
So, you want to keep investing and having life insurance. And then when that's, hopefully everything works out at the end, you don't use it. And that's like car insurance, house insurance, like it's just there.
Right.
Right? You're not, the only gain for it is it's protecting what you have.
You're right.
And
Okay.
and life insurance, I don't know if there's a lot of people that have it. Like, you protect your car, you protect your house.
Yep. Absolutely.
Like,
yeah.
your most important asset is you. Hopefully,
and your family.
you
Yeah.
should be protecting you,
I think
right?
a lot of people are just thinking, well, nothing's going to happen to me. I'm going to be around. My family will be fine. Why should I pay extra for this? But this is one of the most important things you can do for your family, just in case something happens. You know that they're looked after. It's not a corny kind of movie kind of thing where life insurance salesman, that kind of thing. No, this is really important. Movies always make fun of life insurance guys who sell life insurance, but actually they're doing a really important job to protect your family.
Yeah.
Yes, it costs a little bit, but it's peace of mind. Especially if you have kids, then you know for sure it's a product that you have to look into. So the next one we'll look at, so that was term life insurance.
Yeah.
Next one we'll look at is whole life insurance.
Yeah. So the difference of this one now, it covers lifelong, and then there's a cash value to it. So this one, along with the universal we'll talk about, is it builds up some cash value to it. Whole life, I always think whole life and universal, if they're a little bit more complicated, and if you can't understand it, I always stay away from it. So a lot of people probably wouldn't go with these two insurances, but there is a cash value component to it. Again, there's stable premiums.
Bob, when you say a cash value for our, all our viewers out there, cash value component, what just
So if you
explain
have a
that.
$200,000 policy, and then let's say you're paying $275 a month, so it's a bit more.
So it's more expensive,
You're adding
yeah.
building up cash, but it takes a bit to build up that cash. So
Okay.
you're building up the cash, so you could use it to borrow against. It's a cash value to it. It'll go into an investment that they choose, right?
So the 200, let's say for example, let's just make it even $300 a month you're paying for whatever coverage that you're getting. That $300 is adding up every month. Is that what it is?
Yes,
Or-
it's going. It's going to have some cash value portion of it.
Right.
So once that cash value is done, you could use that to pay off the whole life insurance. You got to really sit down with someone to figure out if this is what you need.
Right.
So I always, term and whole life, it's going to be a big difference
So
in
completely
payment.
different. Yeah,
Right.
yeah.
So, to rather go with the term, maybe invest the difference of whole life. So it does build up cash value compared to universal life. Same, but universal life you can pick your investments with it.
So what you're saying is, let's say whole life, you get the coverage and it costs you $300 a month. Term life, you get the coverage and it costs you $50 a month. What you're saying is that difference of $250 a month, you could actually invest that you're
into your
saving
own, right.
on your own with a financial planner.
Right, and then you get to keep that at the end to give to whoever.
Yeah.
The only thing with whole life is that you're going to get just the coverage, $200,000, no matter what you put into it.
Right.
So the death benefit doesn't pay out the $200,000 plus what you put into it. It's just that life insurance coverage of 200,000.
Now, this again, to clear up some confusion, this $300 a month that I'm paying into, is there a set term to this policy? Let's say only 25 years and then it stops, or it just keeps
No,
going?
whole life is for life.
It's for life.
For your whole
so
life.
at some point when it does stop, when does it stop? When you die?
Yeah.
So at that point, that $300, you get the insurance coverage. Let's say it's $500,000, you'll get that. Your survivor will get that. But what about that $300 a month that you have put in?
No, it's just one. Yeah, it's
It
just
just goes away.
500,000.
It's only the 500,000.
Yeah.
What the policy pays out that you get.
Yeah. So it just becomes complicated. You really got to sit down with someone to go over it. And like I said, it's not for everybody. I'd rather build up your cash separately to your life insurance.
On your own, yeah.
But it is a product. It's out there, whole life. The benefits, the more cons are just higher premiums.
Right.
So and complexity. That's that's why term. Keep it simple. You get a insurance policy. I want it for 30 years. This is what I'm paying, and this is what I'm paying for those 30 years.
That's term life. Keeps it simple.
Keeps it simple.
You have a coverage. Keeps it simple.
I have term.
Yeah.
That's right. And I have it to a certain age, and then that's it.
And going back to term for a second, let's say you get 65, your mortgage is paid off, kids are grown up, gone away, and you still have this policy that you're paying $30 a month into. You could just keep that going until the day you die, right?
Term?
Yeah.
No, so
or is
it goes to the term. The end is the term.
Okay.
Yeah.
So your insurance expert would tell you what the end of the term is.
Yes.
Okay.
Yeah.
Okay.
You'll know. Like you'll have a end of the term.
Okay.
I get it now. 30 years, you're done.
Okay.
So and like I said, 30 years. It's a long time.
Yeah.
So you want to really be. That's where you want to budget. You want to invest, because during that time, if something happens, you're covered.
Yeah.
And after that, if something happens, you built up a good nest egg.
Yeah.
You don't require.
But some people I've heard they keep their policy going anyway. They say, okay, now it's just myself and my spouse. And if something happens to me, I can leave a little bit of money for them. So they just keep that going, but they have to renegotiate that policy.
Yes, yeah.
Okay.
Set out a new term policy.
Okay.
But by the time you do that at an older age, it's going to be more expensive. Right?
It's going to be
so that's why
considerably more expensive, right?
Really focus in on early, that you're covered properly to the date you want to covered.
Okay.
If you want it till 70 or if you want it till 65.
Right.
Really, when is that policy? When do you want it till? That's what you want to think about.
Okay.
Okay.
Fair. Yeah, makes sense. So we've covered term life insurance, whole life insurance. Now we're going to move into universal life insurance.
Yeah, so it's similar to whole life. Again, it's a little bit higher premiums, but they are flexible. There is a cash value accumulation. Universal, again, this is very complicated. I think it's just the complexity just keeps going up. So you're mixing your investments and your insurance together. You can borrow off, you can do policy loans. It just becomes you can pick your own investments. So you can pick something a little more conservative, a little more risky.
Is there people who do get that universal and whole life and universal? People
yeah,
do get it?
It's out there. Companies sell it. It's there. I just find again the complexity, market risk and universal, because you're picking it. You can pick a little bit more riskier investments. The cost of universal life is normally expensive. So really, most people that are getting universal life, it's a higher. Like it's just. Maybe the high net worth people are getting universal life.
Right.
But like I said, you might as well invest the difference and get term for the same amount of time.
Right.
It's just very complex. Again, I'd rather keep your investments separate to your life insurance, and then your investments, keep them separate. But they are offered, and
So what your message is, it's a product that everybody who's got a family, starting a family, needs and should think about.
If you're starting a family, insurance is key.
Once you get married, life insurance is really just as important as your car insurance, obviously. Home insurance, obviously. Then comes life insurance.
Yeah. So let's say you have a husband, wife, 2 kids. a husband passes away, well, he could be the sole income earner.
That's right.
Well, you want to be like, she's going to have to go back to work, but then it's
Give it a little bit of an umbrella for her.
right, and it's an emotional time. So
Yeah.
you know that, and most policies, term policies, are paying out pretty quickly. Within
Right.
2 weeks, you should
Yeah.
have your the funds,
Yeah.
and it's tax free.
Yeah.
So if
Also,
say
the amount that the survivor gets is
Yeah.
tax free. Eh?
yeah, so 500,000, say, at least that'll, you know, cover the funeral costs, any debts that whatever number you laid out at the beginning,
Yeah.
covers everything. So then, you know, it may cover some salary just to help the kids and life in general. And then you might want to go to work and get a job. That's
Yeah.
fine. But that's the term policy or life insurance policy really helps
Yeah.
that moment.
It's a simplification of a product that will help you in your time, in your family,
Yeah.
in the time of need.
Yeah. So if you have a family, life insurance should be on your number one
Right
priority.
on.
And like I
with-
said, term's simple. It's easy to understand, and it's cheap. So put it in your budget. It's like I said, car insurance is more expensive than term insurance.
Well, this is the thing, right, Paul? Yeah, absolutely. You get the simple one, term life insurance. Let's say you want some absolute basic coverage, maybe just 100,000, and if I'm just picking numbers here, if it costs you $20 a month, really, like what is $20 a month? So to provide comfort for your family in case of the emergency that something happens to you. So it is really important that you and your significant other sit down and talk about this issue. So the one last one the next one and the last one too that we'll look at is mortgage insurance.
Yeah, so a lot of banks offer this mortgage insurance. So it basically covers.
If you buy a house, you have to have proof of insurance.
It's proof of insurance.
Yeah.
So it doesn't have to be mortgage insurance as long as you have proof of insurance. But
Yeah.
the mortgage insurance, say you have a $200,000, maybe $300,000 mortgage, that's going to cover that. So whatever the policy is, $30-$40 a month, will cover that insurance. The only thing with mortgage insurance is that your mortgage is dropping,
Right.
but your payments stay the same.
Same.
So
yeah.
you're covering. This is $200,000 now. You have a $100,000 mortgage. And you're still paying the same $40 a month fee. So term insurance, you pay $40 a month, and your payments, your insurance stays the same. So, have term insurance to cover the mortgage, and then it's always there. So and sometimes mortgage insurance gets a little complicated as well.
Yeah.
They have different. You got to really watch the fine print. So
what you're saying is, let's say, for example, I have a mortgage of $500,000, which is not unheard of nowadays. $500,000, it's possible. So I get a mortgage insurance. So that's my mortgage. So I get mortgage insurance for $500,000. 10 years, 15 years down the road, my mortgage is down to $250,000, and if I pass away, that's the only thing that I'm going to get is $250,000. I'm not going to get.
It's going to cover the mortgage only.
And that's
There's
it.
no additional. Yeah. It's not covering your any other things for your spouse or education for your kids. Nothing. It
They
just
don't
covers
get any
the
money.
mortgage.
They don't get that.
No, it's just the mortgage is paid.
So it's not like the original policy was.
You can get insurance to cover your visa as well. Like,
Yeah.
You get debt
Oh, God.
insurance.
There's
so many
insurances for everything.
There
There's
is
insurances
insurance
for your wedding bands, rings, everything nowadays.
That's
yes.
why I say term just cover everything.
Yeah,
Just
yeah.
cover it all. So,
Yeah.
these are all products. Term, whole life, universal, mortgage insurance. They're all products. They're not for everyone. That's why you got to do your homework. Sit with someone saying what's best for each individual. But there are products, and like I said, term starts very simple, and then whole life it just gets complicated, and then your mortgage insurance. So, just as a if you're starting a family, life insurance is key.
Yeah, term and go with a product that would save you money and not cost you money and provide coverage for your family as well. You can't, it's not something people I speak to, they just don't want to talk about it. They just say, well, it's a touchy topic, passing away, this, that, but it's just something that you and your significant other sit down and talk about it. Find an insurance planner, whether it's at banks. Banks, I think, sell it too, or independent people sell it too, or companies. All kinds of companies out there now. Call them, make an appointment, have them come in. They'll probably come to your house, sit down with them, tell them exactly what your needs are, how much your income is, what, etc., and they'll suggest a product for you that is perfect for you without costing too much. So it's something that you absolutely have to look at. You can't stick your neck into the sand like an ostrich and say la 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 la. I don't want to talk about it.
It's like a will. It's something
Yeah.
you don't want to keep putting off, right? So again, it's part of the planning.
Life
Just
is
plan.
exactly. You got to plan everything in life in order to succeed in life, and you don't know what challenges are going to come tomorrow. There's other insurances, critical disability insurance, this and that. Those are things. Again, you can talk with. Those are not life insurance.
No.
What we discussed today is life insurance, something that pays out in case something happens to you. You're not around anymore. Basically you die. As I hate to say it that way, but that's the reality of life.
Yeah. So a quick little scenario, just say, a 25-year-old with $500,000 coverage for about 30 years
Right.
would probably pay $40 a month. Compared to whole life, same scenario, 25-year-old, $500,000 would probably pay $275 a month.
Okay.
So those are the differences. So that's a big difference. So I would say if you go with the term policy, you can invest the difference of $200 and some a month.
Right.
Over that 30 years, you're going to build up a good nest egg.
Oh, absolutely.
So then that's your money on the side, and you're still covered for that $500,000. So you're getting the best of both worlds that way. So that's just a quick little scenario of what the difference of term and a whole life is for payment.
Yeah.
Okay, like I said, there is some benefits to whole life, some cons, but just for simplicity, for covering life insurance for majority of the people, I would do term insurance.
Term insurance, because it costs you less, especially when you're starting out in
Well,
life.
it fits in everyone's budget nicely, right?
Yeah,
So
yeah,
and
absolutely.
it does its job.
Yeah,
It's just
yeah.
it's like having automobile insurance. It does its job.
Yeah.
You
No,
want
we all
that
talk
covered.
about car insurance. Oh man, I pay so much for car insurance. So much, we call different companies trying to find out different prices for car insurance. Same thing with home insurance. But nobody wants to talk about life insurance. They just say, well, I don't want to talk about it.
I pay more for my car insurance than I do my term life policy.
There you go. See, yeah, exactly. $200 a month you pay. But you got to pay. You have to have car insurance. You have to have
Yeah, you have to have car insurance, but you don't have to
home
have life
insurance.
insurance.
Yeah,
you have to have
that
home
makes no
insurance.
sense, right?
But
So
that's why I said, yeah, that's things. Anyway, so there's other insurances out there, but just the basics for
these are the
covering.
basic ones that we've
Yeah.
told you about: term life insurance, whole life insurance, and universal life insurance. If you have any other questions, please, when you leave comments, put it in your comments, and we will answer all your questions. Okay. Is there anything else you want regarding this
No,
topic?
just like I said, plan and plan and plan.
Yeah.
And just take that time out. Pick a time, sit with your spouse or whoever to sit and just what do we need?
Exactly.
Where do we want to go? You want to really, because in the end, if a situation happens, you're prepared.
Yes,
That's the key.
absolutely.
You want to be prepared, right?
As Paul and I always say, you got to sit down every month, see where your expenses are and what your income is, and where the money is going out. You can even get apps that will show you,
Yeah.
and then you can. From there, you know how much money is left over, and so you want to get life insurance. Then you know how much you're able to spend,
Yeah.
right?
Yeah. So
and what coverage you can get. So everything comes down to planning. Whether you're planning with a financial planner, you're in your banks, or you're an independent financial planner, or you're planning with an independent insurance coverage people. But you got to sit down and talk with them. And then you tell them, this is what my limit is, what I can spend per month. What can I get for that? That's it.
yeah.
Yeah.
Yeah, you just want to make sure you're properly covered.
Absolutely. So I hope that we've managed to clear up some confusion on different types of life insurance policies today. This is, as we said before, this absolutely is one of the most important decisions you can make in your life. No two situations are the same. We always say no two situations are the same, as no two families are the same. No two financial situations are the same. Therefore, we mentioned already, it is important to sit down with your financial advisor and an insurance advisor and figure out exactly what product you need and exactly what coverage you need. So again, thank you very much for watching. Please like, subscribe, and turn on your notifications, and help us out with the algorithms. It means a lot to us. Thank you so much for joining us today, and we will see you again next time. Thank you.